3 years into freelancing, I opened my banking app in April and saw a tax bill that was bigger than my rent. Not because I didn't make enough money that year. I made plenty. I just had no idea how much of it was never actually mine to spend. If you're a freelancer, a contractor, or you run a small business and you've ever felt your stomach drop when you remembered, oh right, quarterly taxes are due, this video is for you. Not for someone with a W-2 and taxes taken out automatically. For someone who has to figure this out themselves, invoice by invoice. By the end of this video, you're going to have a simple system that means you never open your banking app in a panic again. Not a get-rich system. A sleep well at night because you know exactly where your money stands system. This is about control. This is about freedom from money panic, the kind of freedom that lets you actually enjoy running your own business. Here's the thing nobody tells you when you go freelance or start your own business. Every dollar that lands in your account is not your dollar. Some of it belongs to the IRS. Some of it belongs to future you during the slow months. But when you're staring at a lump sum in your checking account, it feels like it's all yours, so you spend like it is. Then quarterly taxes come around, or worse, April hits, and suddenly you owe thousands of dollars you don't have because you already spent it on rent, on groceries, on reinvesting in your business. Completely reasonable things to spend money on, except you didn't know that money was already spoken for. And it's not just taxes. It's the feast or famine cycle. One month you invoice $8,000, the next month you invoice $1,200, and there's no HR department smoothing that out for you. No safety net. No sick days. Just you, your invoices, and a bank balance that swings wildly every single month. That anxiety, that low hum of, am I going to be okay this month? That's the real cost of not having a system, not the taxes themselves. The system is what's missing. So let's fix that one step at a time. Step 1. Open a separate business bank account, today, not someday. If you're currently running your freelance income through your personal checking account, stop. Open a completely separate business checking account. Every client payment goes there first. Not into personal checking. Not into savings. Into one dedicated account that exists only for business income. Why this works? When personal and business money live in the same account, your brain can't tell the difference between money I earned and money I can spend. Separating them creates a mental and financial firewall. You literally cannot accidentally spend your tax money on a grocery run if it's sitting in an account you've mentally labeled, not mine yet. Here's what that looks like in practice. Say you invoice $5,000 this month. That $5,000 lands in your business account. From there, you're going to split it using the next few steps, but the second it touches your personal checking account, it should already be cleaned, meaning taxes and savings have been pulled out first. Step 2. The 30% tax skim, automate it so you never touch it. The moment income hits your business account, immediately transfer 30% of it into a separate savings account labeled taxes. Do not touch. Not at the end of the month. Not when you remember. The same day, ideally the same hour that a payment clears. Why this works? 30% is a safe estimate that covers most freelancers' federal and state tax obligations. Self-employment tax included. It's better to slightly overestimate and get a refund than underestimate and owe a penalty. But the real magic isn't the percentage. It's the immediacy. If tax money sits in your spending account for even a week, some of it will get spent. Moving it out on the same day removes the temptation entirely. Here's the real number version. A client pays you $2,000. Within the hour, $600 moves to your tax savings account. You now see $1,400 in your business checking, not $2,000. That $1,400 is the actual honest number you have to work with. No surprises in April. Step 3. Pay yourself a salary, not whatever's left over. Decide on a fixed monthly salary you pay yourself from the business account into personal checking, based on your lowest earning months, not your best ones. Everything above that salary stays in the business account as a buffer. Why this works? This is the single biggest fix for feast or famine anxiety. Instead of your personal spending swinging wildly with your income, it becomes flat and predictable, like a real paycheck. The business absorbs the volatility instead of you absorbing it. Let's say your worst months bring in $2,500 and your best months bring in $7,000. You set your salary at $2,200. In a $7,000 month, you pay yourself $2,200 and the remaining $4,800, minus your tax skim, stays in the business account as a cushion. In a $2,500 month, you still pay yourself $2,200, pulling the difference from that same cushion. Your personal life never feels the swing. Step 4. Build a dedicated quarterly tax payment ritual. Mark your calendar for the 4 IRS estimated tax deadlines: mid-April, mid-June, mid-September, mid-January. On each date, log into your tax savings account and simply pay what's built up. It's already there, already set aside, already calculated. Why this works? Because you've been skimming 30% all quarter long. This stops being a scramble and becomes a 5-minute task. You're not calculating anything under pressure. You're not liquidating other accounts. You're just moving money that was never really yours to spend in the first place, from one labeled bucket to the IRS. Here's what that looks like. After 3 months of steady $600 per payment tax schemes, you check your taxes. Do not touch account and it's sitting at $4,200. The quarterly payment comes out to roughly that amount. You pay it, watch the account reset towards zero, and move on with your week. No panic, no borrowing from next month's rent money. Step 5. Build a 1-month buffer before you touch a single extra dollar. Before you increase your personal salary, invest in new equipment, or treat yourself to anything beyond basics, build your business checking buffer up to cover 1 full month of your baseline salary and business expenses. Only after that buffer exists do you start using extra profit for anything else. Why this works? This buffer is your permission slip to stop panicking during a slow month. Without it, every dry spell feels like an emergency. With it, a slow month is just a slow month. You've already paid for it in advance. Here's the real number version. Your monthly salary plus basic business costs total $2,800. Once your business account cushion sits comfortably above that number, even after the tax skim, you know that if a client ghosts you or a project falls through, you're not in danger. You have breathing room. That breathing room is the entire point of this system. Now I want to tell you about a client-turned-friend of mine, a freelance graphic designer named Priya. For her first 2 years freelancing, she described her financial life as a slow-motion panic attack that resets every 3 months. She'd get a great month, feel rich, spend accordingly, and then quarterly taxes would hit her like a truck she never saw coming. The turning point wasn't earning more money. She was already earning enough. The turning point was putting exactly this system in place: separate account, automatic tax skim, fixed personal salary. 6 months later, she told me the strangest part wasn't the money in the bank. It was that she stopped dreading her own banking app. She said, and I'm paraphrasing here, that for the first time since she went freelance, opening her accounts felt boring instead of terrifying. Boring in this context is the goal. So let's recap the system. Separate business account, automatic 30% tax skim the moment money lands, a fixed personal salary based on your worst months, a quarterly tax ritual that takes 5 minutes instead of 5 panic attacks, and a 1-month buffer before you spend a single extra dollar on anything beyond the basics. None of this is about restricting yourself or being bad with money. It's about running your freelance work like an actual business, not like a series of lucky paydays. A business has systems. A business has payroll, even if that payroll is just you. When you start treating your income this way, the anxiety doesn't come from having less control. It comes from having none. This system hands the control back to you. If this is helping untangle your own quarterly tax stress, go ahead and hit subscribe now so the rest of this series comes straight to you. And if you're a freelancer or small business owner, I want to know, which step in this system are you most behind on? Drop a comment and tell me. Is it the separate account, the tax skim, or actually paying yourself a real salary? I read every one of these. And if you're ready to take this further, next video I'm breaking down exactly how to calculate your specific tax percentage instead of using the flat 30% estimate, so make sure you're subscribed for that one.